I'm Dan Fitzpatrick at StockMarketMentor.com on Tuesday, June 18th, and I want to look at our old friend Tesla. I'm telling you, this is a stock that's going to bite you if you're not careful. This is a stock that should be lower. Look how far it is above the 200-day moving average. I mean, it's stupid high. 45 bucks is the 200-day moving average. The stock is up at 103 bucks. That's what? I don't know, mental math, 130%, something like that, somewhere around there. Some mathematician with a calculator is going to find that out in 2 seconds. But it's way above the 200-day moving average. It should be lower. Here's the problem. First of all, they've got earnings coming up on July 22nd. That should be the catalyst for this stock because pretty soon, and I don't know what the blackout period is, if it's a month or whatever, but there's a certain amount of time where the company really can't say anything just before earnings. So you've got July 22nd as the earnings date for this company. They've got what Consumer Reports, I think it is, Motor Trends, whatever, calls essentially a perfect car, like 99 out of 100. Once it gets to be about 300 or 400 miles on the mile limitation, then I'm in. I'm happy to buy one as long as they make a big one. But for now, I'm just watching the stock. And here's the thing. 30% of the float is short. Okay, that's a massive number of shorts in this stock. The stock is not going down. Now, that total was as of March 31st. So perhaps over the last 18 days, the reason this stock has been kind of floating upwards is because a lot of those shorts have been covering. I know if I were short, I would. But in any event, the stock is not doing what it should do. It's not moving down. So we have to anticipate that it is going to move higher. But just keep something in mind. While there's over 18 million shares short, the short ratio is actually pretty low. Okay, 1.27. The reason is because the stock trades over 8 million shares a day. So it won't actually take that many days, and this isn't an exact number, but it won't take that many days for all of the shorts to cover if that's what they choose to do. What I'm suggesting is that you at least don't get complacent with this stock. Know that if the stock starts hitting the upper Bollinger Band, that's going to be different. Hasn't done that for a while. And so you're likely to see the stock blast to new highs. If the stock starts trading lower here because of earnings, I just don't think there's that much of a cushion. Excuse me, let me put it a different way. I think there is a cushion. I don't think there's going to be that much downside to the stock because of the anticipation of earnings. And think about it. After the positive publicity over the last several months, don't you think Tesla's probably done pretty well as far as sales? My bet is they have. So the question will be, will the numbers that are announced actually meet what are likely to be really high expectations of the company? That's your risk reward. That's the risk that you have to take into account. So anyway, I like Tesla even here. It's kind of an ugly chart. I don't see it blasting off anytime soon, but if it starts hitting the upper Bollinger Band, if you're an active trader, I think you want to be there. If it starts closing below the middle Bollinger Band, then I don't think you really want to mess around with it until earnings. And we'll be watching this. Could be that we've got a great buy point prior to earnings, which could be really profitable. Anyway, that's it. Okay, members, over to the strategy session. I talk a lot about which way the trends are in stocks and how to stay in phase with those. So hope to see you there and in the forum tomorrow.